Aloha, 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 and a massive hello to everybody. Hope we're all having a great day, a great weekend. This is 50 Pips, 8th of November, 2015. Not making any trade calls or recommendations because you're only responsible for the trades you may decide to take. And the fact that you're listening to this means you've read to understand you accept all the disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So guys, what's shaping up for the week? Well, keep in mind that it should be interesting again if we've had some decent moves, so let's see if we get some follow through. Now, keep in mind that we do have an awful lot of China data this week starting off over the weekend, and then Monday should be a fairly quiet day in terms of data flow. We do have Eurogroup meetings, but apart from that, it should be fairly quiet. Tuesday, we'll start to have some Australian data, we'll have more China data, and we'll have some data out of the RBNZ. Then Wednesday, again, a lot more data out of China. We've got average earnings out of UK, claimage count, so, unemployment rate with Carney speaking. So that should be an interesting day. By the way, that's Veterans Day, so bond markets are going to be closed. And then we've also got Draghi speaking. Back end of the week, what do we got? On Thursday, we've got unemployment out of Canada. We've got unemployment out of US. We got Yellen speaking. We've got Draghi speaking. So, we've got quite a lot of stuff on the wires. Friday, again, we've got some FOMC speakers. We got the GDP out of Germany, and we got retail sales PPI out of the US. So again, also with the University of Michigan. So again, all in all, not a fairly steady flow of decent data flow, but nothing, crazy going on. Should be a bit quieter, but clearly there's the potential for some moves. The first thing I would say is caution on Monday with lighter flows. We could see some extensions. It's not really a day to try and get stubborn fighting flows. Where are we? So looking at gold. Gold's had a very aggressive move down again, following that jobs number. We were looking for gold to try and base somewhere around basically this 1150 for then to some kind of rebounding back into those highs, and clearly this does not work. We got a complete breakdown back into these lows, back into this lower end of the range. So we'll have to see how this trades, but clearly this is a very, very big test. This whole area is a very, very big test for gold, right? So we'll have to see how we behave, and especially the fact that it's holding below this 1100 means it will likely hold very, very heavy. Now, keep in mind that it's usually not a great idea to try and catch gold in these areas. It tends to be better to wait for some kind of fake out. You don't really want to be the first one or try to fade flows, especially early in the week. So I would be cautious here trying to catch this at the beginning, but I would still expect this to try and settle and maybe recover a little bit. Keep in mind that the bull bear line for the week is going to be the 1100s. Should we hold aggressively back below these previous lows here, then we would expect this to try and accelerate back towards the 1050. If we can hold above this whole area, then we would expect a lot of wheeling and dealing around the 1100, and that's going to be the bull bear line for the week and for every single day. Okay, bottom line heavy, but I would not necessarily be looking to chase continuation here at lows. Cable, what's going on cable? So cable, we expected this to start the week. We're saying we can make a fairly decent case for the bull or the bear case. We expected this in any case to start the week and try and clip some stops above this 155 mark before moving back down. It didn't even manage to do that. It just went straight back down from there, right? Now, the fact that it's holding and closing below these 50.85s likely means it's going to continue to hold a very, very heavy tone. Now, usually, in these kind of cases, you'd always expect, the percentage play usually is not to look for continuation, but we know that when cable gets going, it could be very, very aggressive. There's been some more Brexit talk over the weekend, so it could try and cause some more pain at the beginning of the week. As always, when it gets going, it loves the pain train. It's going to continue to try and cause max pain. What I would say is going into the week, look at this 50.80s as a bull bear line, right? If we can catch a bit of a bounce here, then don't be surprised to try to see this move back to the 152, 152.40s. But as long as we continue to close below this level, then one would expect that the path of least resistance is for this to try and continue to hold relatively heavy and try and take a stab at 148s. As usual, I would be careful about trying to change flows or careful about trying to fade flows early on the Monday, but that's what we would be looking at on cable. Yen, euro yen, this is one of the most interesting charts for me here. We'll have to see what happens. We've had a lot of wheeling and dealing here at these lows where the market trying to take out these air but can't close below this 131.80s, right? Can't get a daily close. It keeps on going back up. So as long as we don't get a daily close back below this level, I would suspect that the path of least resistance is try to have a little bit of a relief rally, and only on a daily close above the 133.14s then we could get a bit more of a pop. But this whole level likely see an awful lot of chop around here, and look at those zones as bull bear lines for daily closes. Now Kiwi, again, we talked about the fact that if it was going to bounce, we could get some kind of bouncy action here at this trend line, but clearly it's holding heavy. Now it's moving back into what is pretty much the 50 back of this move off up, coming back down, and we'll have to see if that holds. This is a major bull bear line for the week, 65.00. Daily closes below, I would expect it to try and come back down and test these previous lows, try and possibly take a stab all the way back down into the 62s. Now if we can avoid a daily close below there, then I would not be surprised to see us try to bounce back up, maybe all the way up into the 65s, right? Into the 68s. We'll have to wait and see, but right here, this is going to be a big zone. A lot of Chinese data, some Australian data, stuff out of the RBNZ. So clearly a very important week here for Kiwi. That means that takes us to Aussie. Let me make sure then I don't forget the other ones. But on Aussie, here again, also holding very heavy. We got to see what happens with all the data flow. As long as we keep on getting daily closes below this 50-day moving average, then one would have to assume that these lows are going to attract, and that's going to be the pain trade. I would be very careful about trying to chase this lows, even though it could extend depending on the data or what comes out of China. I think the bull bear line to the upside is going to be what happens at this 50-day DMA, right? Any bounces, as long as we don't get a daily close above there, it'll likely hold heavy. If we get a daily close back above after the data on some China data, if we get a daily close back above this 50 DMA, then I would not be surprised as to try and take a very quick stab at this 100 DMA, and I would not be surprised to see the week close back with an aggressive stab at the 170 at the 0.7475 range. But as long as we don't get a daily close, this will likely continue to try and hold heavy and try and move to the downside. Okay, so that takes us back to Euro GPB, still stuck inside of that range. As we said last week, we would be structurally we're short. We're looking for this ultimately to trade back into the 62.60s. Be very cautious. We talked about this early last week. We said this is everybody, their hamster, their goldfish. Even ourselves, we've been playing this to the short side. There's so much. Everybody's positioned the same way, so don't be surprised if you get aggressive squeezes here. Clearly, if we don't get daily closes back outside this range to the upside, it's still just a rally you can sell into, but be very careful on the squeezes. And you can see the action we got, very aggressive squeeze. Everybody's positioned the same way, so be very careful, and especially if we get, and we warned about this last week, right? If we get more and more talk about Brexit, stuff like that, people are going to have to cut this trade, and everybody's positioned the same way, so be careful, okay? Be careful on this one. So we'll have to see what happens. Still stuck in this chop range, but again, all our previous discussions on this remain completely valid, no change. Euro USD, what's happening here? So just a refresher, we've been talking about this for a long time, and we said that as long as we don't get a clear next step out of Draghi in terms of QE negative nates, prolonging QE, whatever, or unless we don't get a clear, we don't get a rate hike out of Yellen, we expect this to continue to trade inside this broader range, which we've defined, as 115s and 104s, right? And we would not be surprised to see this moving very, very aggressively inside this range. But for it to break outside, we suspect we need to get something new, some clear definition on what the next step is from the central banks, right? Also, we said, the bull bear line or the key zone was going to be in the middle of this range. Daily closes above here. We're more than happy to try and play the upside. Move back below will likely be heavy, and it was all about that 0850, 0800 zone, which actually broke. Now, going into the week, this is going to be the pivotal zone. It's all about this level. As long as we keep on getting daily closes below and we can't get back above the 0800 level quick, then we would have to assume that the market is going to try and take a stab at these lows, 05s, 04s, right? If the market can get a quick close back above the 08, maybe if some data, some stuff can support, then we wouldn't be surprised to see it trade back into the 110 range. Okay, so that is which is essentially back to mid here. So very interesting on euro, all about action around this 0800, 10800 going into the beginning of the week. Now, what else have we got? S&P, as we discussed on the bigger picture, above that 2073, we said, we're looking to position to the short side, but we're not in a hurry. Everything is pointing to the fact that it likely needs to fail from a higher level, and that's still bid. And as long as we're getting closes above the 2073 from the weekly, this is likely going to be bid, and we'd expect it to try and test those highs. So, close back above that range, still holding a decent bid tone, right? From an intraday trading perspective, we talked about this 2100, and there were some very nice shorting opportunities, short tactical shorting opportunities off this level. But as you see, the market continues to hold a bid tone. So you can, dice it or look at it any way you want. But for now, it still looks that it's got a bit of a bid tone. And if it fails, it might have to fail from a higher level. Do we think that the next healthy move, bigger move, we're talking about, 25 to 50 point move is be healthier to see it to the downside than the upside? For sure. But does that mean that we're going to blindly try to short this? Absolutely not. You have to look at price action. Price action is still holding a bit of a bid tone. We'll have to wait and see, but clearly very tactical trading here, even though it looks like it's very it's supported. CAD, we talked about the fact that we could make a case for the long side and the short side, and there were some very nice shorting opportunities at the beginning of the week, and then there were some very nice long opportunities towards the back end of the week. Right here, not a lot has changed. We're still stuck. We talked about the fact that we were looking for daily closes outside the ping pong zone, which was 131, 132, 133 to guide. So right here, look at how we trade going into the open on Sunday night here and Monday, right? So basically, as long as we continue to hold above the 133, then you would expect this to hold a bit of a bid tone. If we close back below the 133, would not be surprised to see back into 132 very, very quick, and effectively back into the mid-range of the ping pong zone. We would need to get a daily close below 131 for this to get bearish again, just stuck inside this range for now. Yen, we were expecting all these moves to ultimately come right back into the 120 attracting, which has worked for a long time. Clearly, it did not work, right? And basically here, it's pressing higher. Now, I suspect as we start to approach this whole broader range here, right, there are going to be a lot of people starting to look for some kind of intermediate top here or some kind of peaking action for a move back into the 122. So the way we're going to look at it this week is that it's going to take an awful lot for this to actually go and close above the 125s, even though it might want to clip the high level. But we would suspect something really structurally, something important would have to come out from one of the central banks for this to close outside that range, right? Basically 125.80s to the upside, and we've got these 115s, 116s, similar to euro to the downside. So I think if we're looking at a healthy move, we would expect this possibly to try and rotate a bit to the upside, but ultimately to try and get a move back into the 122s sometime in this week, and then this is going to be the bull bear line for the rest of the week. What else have we got? We got crude. Crude, not a lot has changed on crude. We discussed the fact that as it was approaching the 43 mark, don't get fooled here. We need a daily close below to get more downside. As long as it can't close below, we'd expect us to hold a bid tone. Nothing has changed for us. We suspect that it's very tempting to try and clip some stops back down here, but unless we get aggressive daily closes below, we still expect that ultimately it's going to try and rotate and make its way back into the 50 mark. Okay, so that's pretty much where we stand, guys. I hope everybody has an awesome rest of the weekend, wherever you may be, whatever you may be doing. And again, see you guys around for London Open. Have an awesome one. Have an awesome week. As always, thanks so much for listening to these updates. Talk to you guys soon. Bye-bye.